Let's address the mega deal from the IT pack. C. Vijayakumar, Prateek Aggarwal, Darren Oberst join in on the show. And Mr. Vijayakumar, congratulations on the largest ever acquisition by any Indian IT company. What does this acquisition really bring to the table for HCL Technologies?
Yeah, it gives us some very good strategic advantage. It gives us very large client base globally. It gives us very stable, highly profitable revenue streams. And these products are in some very large market segments, which is of good interest to us, be it security, commerce, marketing. And this is all what we are focusing on when we're working on digital transformation for our clients. So it's in a very attractive, large market segment, $50 billion plus addressable market, and a global reach, global install base with 5,000 plus clients. So all of this is like extremely strategic and beneficial for our overall business across our mode 1, 2, 3. And for mode 3, this is really a very big step because we already crossed $1 billion run rate. This is going to significantly enhance that position.
Right. Darren, I want to get you in here because you already had an IP deal on 5 out of these 7 products that you're acquiring. How does it change from the earlier scenario?
I think it's a great question. And I think what the IP partnerships have given us some confidence in is to understand the products, the markets, a lot of the execution capability around how we can modernize and transform and improve the capabilities of those products. So I would say in some respects, those IP partnerships are the foundation that we're now taking the next step of building upon. And so what we'll be taking on now is all of the front office responsibilities, the relationships with customers, new sales, all dimensions of product strategy, product marketing, all of those capabilities to build and deliver and sell new products. And so we think it's both the next evolution of what we've built so far, but really unlocks a whole new set of possibilities. We'll be able to bring HCL's energy and focus to all of these products and to all of its customers. It also, I think, starts to open up a broader set of opportunities for us to cross-sell and upsell additional product capabilities as well as service capabilities. As CVK mentioned, there's a lot of natural synergy and adjacency with many of these products, with key growth areas for us on the services side in terms of Mode 2. So we believe that this transaction will really position us then for that next wave of bringing together both software and services and driving some of that synergy growth.
Prateek, how will you be funding this deal, and by when do you expect this deal to get completed? What is the payback period, essentially? That's what I'm trying to ask you.
So the total value of $1,775 million, slightly less than half of it has to be paid at close, which we expect to be in the middle of calendar 2019. Now, for doing that, we have enough cash on the books for handling that kind of a money, but because some of it is in fixed deposits and long-term bonds, we might have to borrow about $300 million. The balance we would be meeting out of internal accruals. The balance amount of 1775 would have to be met after year 1 of close, after the end of year 1, and that we would again generate from internal accruals.
All right, CVK, this question's coming your way. This move will strengthen your Mode 3. Do you expect substantial revenue contribution coming from Mode 3 by the next fiscal, and will it take some time for revenues to start reflecting that? Does this move add scalability to the offering?
Yeah, revenues will start kicking in the moment we close the deal, which we believe will happen middle of 2019. So from our expectations, it may happen as early as April, but most likely May or June is when this deal will get closed. and that is subject to some regulatory approvals. The revenue will start kicking in immediately after that, and we expect this to significantly add to our Mode 3 revenues. Just the product revenues will get added, but as we kind of build more service offerings around it, we see some synergies to the Mode 1 and Mode 2 business, which will add on to this. And we expect an incremental revenue of $650 million on an annualized basis. So typically we would expect that to hit in the second year. In the first year, it would be a little less.
Prateek, so how does this impact your margins? Mode 3 typically has higher margins. Could we expect a big boost to your profitability going forward?
So you are absolutely right. Mode 3 has higher margins, and this deal also would have higher margins. And that will have a somewhat positive impact on the overall. But we are sort of not guiding for the future right now. But this deal will certainly be positive for the overall margins.
Right. Vijayakumar, most of these products are in marketing and commerce, which are increasingly delivered as standalone products as well. How will they help you create compelling offerings by combining these products with your Mode 1 and Mode 2 services?
Yeah, these are products, and some of these products have large installations in big clients. So it can start with integration of these products with other solutions, which are very integral to make these products work. Upgrade of these products to the newer versions that we would be launching. And the ongoing application development and support on these products is again a great opportunity for additional services on top of this.
Vijayakumar, HCL has its own branded versions of some of these products. What happens to those?
Yeah, they will continue. I mean, that was a part of the IP partnership. We've launched HCL's branded versions. We will continue to build on top of it. Now, the new customers, all the existing customers, have an option to take their upgrades directly from HCL.
Okay, gentlemen, thanks very much for giving us more details on this big deal, and congratulations to all of you. Wish you the very best with its execution.